We are going to have such a great conversation today. We should probably get started.
Yeah, let's go.
We have a great crew on the line with us today, so let's do this. And Jeff will be joining us in just a moment, but everyone, welcome. Thank you so much for joining us again. We're excited, particularly excited about this morning's discussion. We think that the discussion and investigation of the regulatory landscape for platform strategy is a timely one. As we've been chatting this morning, we've seen so many recent and interesting, fascinating, really, examples of how the regulatory landscape is pacing or not with the evolution of platform strategy. So again, welcome. Thank you for joining us for another deep dive today into the world of platform business strategy. On behalf of my partners at the Platform Strategy Institute, we appreciate your time and perspective as we collectively investigate and build the platform economy together. So today, just as a quick housekeeping note, please definitely share your thoughts and questions in the chat window. We are going to be keeping an eye on the chat window as we walk through the conversation today. And then we're reserving the second half of the hour that we have today for just an open discussion. Ask me anything. That's your time to dive in, share your thoughts, your questions, and we'll attack them together. So again, thanks so much. Yeah, thanks, Marshall. So yeah, weigh in, let us know where you're from in that chat window. We'd love to hear where everyone's from. But just as a level setting, once again, today we're going to be focusing on regulatory risk and platform strategy. We'll dive into the regulatory landscape and how that might differ from region to region, the implications for some of these global, very large online platforms. The gatekeeper platforms, we're starting to see those platforms shift into a role of essential digital infrastructure. And as that role matures and grows, there is a societal and economic impact to the decisions and the operations that they execute. So we're going to be looking at that tension between these very large global platforms, their governance systems, and the regulatory oversight, and what might happen or what we might want to keep in mind if the governance systems start to tip the scale. We need to think about how the regulatory environment maintains pace with the growth of the platform business models. Amanda, let's dive into the next page, if we could. So this is your team of hosts. So again, I'm Diane Finkhausen. My partners, Marshall Van Alstine, Peter Evans, and Jeff Parker. Yeah, give us a wave. Thanks, Marshall. Peter, give us a wave. We're happy to host you in this ongoing dialogue. We're super excited to be collaborating with you in this space and thinking through what might be next and helping to build that together. So the Platform Strategy Institute is invested in advancing the theory and practice of platform strategy. And this is an exciting time. We believe this is the year of the platform. So, so we've got an exciting year ahead of us. Next page. With that, we are going to clip through the materials today pretty quickly. I'm going to hand the baton over to Peter in just a moment here, where we will dive deeply into the regulatory landscape, how that might differ for different areas around the world. Just real quickly, what we're going to cover today is the regulatory landscape, some of the policies shaping the platform landscape. Going to dive a little bit into gatekeeper platforms, anti-competitive behavior, the role of data and platform fairness, mergers and acquisitions. And then, as I mentioned earlier, we're going to reserve the second half of the hour just for an open discussion, questions, discussion, ideas, etc. So buckle up and let's dive into this. This is going to be a great discussion. We're super excited about the conversation today. So Peter, over to you.
Great. Thank you very much, Diane. Appreciate the opportunity. And today we're going to present a couple of ways of thinking about the regulatory landscape. In the platform world, I think we're moving from a period in which it was a lot of talk and analysis to platform design, the data stacks, kind of how you get scale. But as the platform economy matures, the regulatory regimes now are beginning to catch up, or at least begin to be more influential in thinking about the strategic positioning of platforms. And it's becoming a pretty complicated and interesting dynamic space. So we thought today we would present a couple of frameworks and ways to think about this new regulatory landscape that platforms confront. So particularly thinking about regulatory trajectories and kind of where regulation is going. So with that, let me go to the next slide and talk about just the main areas. There's obviously lots of different regulatory regimes that influence, but there are probably 7 that get a lot of attention. One are the gig worker rights. So those platforms that engage large workforces are kind of confronting that. And it's a very varied landscape in terms of what the regulatory regimes are that govern that. Trust and safety obviously have popped up as key issues. And we're seeing a lot of platforms actually hire people specifically to manage those issues. I just wrote an article about that, so you could take a look if you're interested. And then your tax policy is also another issue. A lot of these platforms didn't actually have to pay taxes early on in their when they launched, but now that's changing as well. You've got antitrust, and we're going to do a deep dive on that. And then we've got cross-border M&A is emerging as an issue as these platforms get larger and they do bigger deals. The M&A regime under which they confront is getting more scrutiny. We also have the rise of governments recognizing the value of data and therefore wanting to ensure that they capture the value of that data. And so there are increasing numbers of rules now governing where you can move data, the regulations regarding that. And some people label that data nationalism. And that's a real concern for platforms. And then you've got AI, right? And these other advanced analytic tools that platforms are leveraging, given the vast amounts of data that they often are able to collect, and that's core to their business strategy. And so the policies that govern AI now are emerging as an issue as well that platforms need to consider. So given all that, so how do we think about this? So let's go to the next slide. So what's interesting is when you step back and you look broadly, regulations actually have different dynamics. And so thinking about the particular regulatory issues that your businesses confront, it's important to start thinking about, what are the longer term trends that affect those regulations? Are you facing what they call a race to the top, in which regulations are converging to a higher common denominator, higher standard? Or are you in a situation where there's intense competition and there's intense pressure to remove regulations? And in those instances, you get kind of a race to the bottom and a convergence to a lower common standard? Or are there really not a race, but rather persistence of national differences? And so the platforms confront a very different set of regulations that they have to adapt their business to, and that impacts their ability to scale. Right now, an interesting case is telemedicine, right, where you get quite a bit of variation across different states in the US. There's a very good study that's just been done on that. So as you're launching your platform, if you spend too much time just looking at launch strategy and onboarding and all this kind of stuff, and you don't pay attention to the regulatory regimes, you could be caught out. And so we've seen a number of platforms that haven't paid sufficient attention to the regulatory landscape. Okay, so one is the regulatory trajectories. If we go to the next slide, we also have to think about the international dimensions. Many platforms now operate internationally, or at least in one or two of the major regions in the world. And so this adds another layer of complexity. And so this framework of thinking about it as a two-level game, i.e. you have your domestic actors advancing and pushing for certain regulations, but governments also have to think about the regulations they adopt in the context of the broader international scene. And so there's this intense dynamic between what happens at the domestic level and what your domestic players want, but also how you position with respect to your competitors abroad. And this has implications across all the issues that I mentioned. If we go to the next slide, this causes us to have to think about sort of where the main players, or some of the biggest players, and where they're going with respect to their thinking about regulation. Europe has made a mark, obviously, with their regulations around privacy, but they have impacts across a variety of regulations that impact platforms. So some people call this the Brussels effect, i.e. Brussels actually has a long reach. The rules that they've established around privacy have actually influenced and had an effect on companies in the United States and elsewhere around the world. And so you could see a higher standard set to what Europe decides. But you also have China as a major player as well. And its position in the market. China now is becoming the largest, retail. If you're in the fast fashion, for example, or some of these other sectors, being able to do business in China is quite important. So thinking about kind of China's interests and how they regulate platforms, or even your ability to get into the China market is a big deal. So thinking about China's position, and then of course the U.S. The U.S. was thought of as a strong advocate of international regimes in a kind of a multilateral approach, but that has broken down in the last number of years. And so, is that a short blip, or is that a trajectory on which the U.S. is going to engage? We're going to see more of an America First approach. So if we go to the next slide. Basically, you have to do a ton of reading, and there's a lot out there with various frameworks and ways of thinking about it. I recommend a book called The Brussels Effect, How the European Union Rules the World. And this makes the case that Europe actually is quite influential in not just setting regulations in Europe, but how it sets the stage in terms of its ability to influence the international regulatory environment. A counter is Martin Jacques' book, When China Rules the World. And that's an interesting case for, China's just getting started. I think most projections show that China will become the largest economy definitively in the next few years. And so its presence, has to be contended with. And so how it approaches platform regulation is something to watch quite closely. And then, we're going to dive into the antitrust issues, and Jeff and Marshall have both been deeply involved in that. So anyway, the point is that to understand these regulatory trajectories and come up with pathways that you think are plausible and defensible, not just what you wish them to be, but what the evidence bears out and suggests is the most likely outcome, requires a lot of research to back that up. Okay, next slide. So this is just a beginning framework to think through. We do actually quite a bit of work on each of these areas, but thinking about, where these big regions are with respect to these issues. And as I mentioned, we're going to do a deeper dive on antitrust, and we've seen a lot of activity. So, is Brussels pushing for a more restrictive set of regulations with respect to competition policy? Also in the US. China is an interesting case. In some cases they are. We've seen the fallout from the Ant Financial. It's not exactly antitrust, but they certainly can have a big impact on what companies do with respect to, you know, their IPOs and mergers and acquisitions as well. Okay, next slide. And then when you're in a larger company, and I experienced this directly, is there's an interesting dynamic between the product lines, which are typically advocates for their product, and therefore they tend to cherry pick the future in ways that are favorable to their product. And then you have the government relations team, and they have the Rolodex and the relationships and understand some of the local dynamics, but they often don't have the time and the wherewithal to do the deeper analysis. So, and we're seeing this in platform companies. There was just a job posted by Amazon for a PhD economist to help them with their forecasting of regulatory impacts. I think the larger companies set up analyst teams to do these deeper dives and provide inputs. And there can be consensus across these groups, but there also can be a lot of tensions. I personally experienced that a number of times when I was at General Electric, where I would do analysis with my team and the product lines flatly rejected it because it didn't align with what they saw as good for their products. And so sometimes that tension can be healthy and sometimes it can lead to some really tough situations. So I think to do this analysis right, companies do need to have independent analysts, either internally or externally, that support this. Otherwise, you're going to get a rosy colored view that could lead to some challenges. Okay, so next slide. Yeah, so I'll turn it over to a deeper dive on the anti-competitive issues that are confronting platforms.
Great, thank you, Peter. Yeah, this is just such a fascinating landscape and period in the maturation of platform business models. So, Marshall, if we can tee this up to you, clearly there is a need for a thoughtful, artful, and delicate balance on behalf of the oversight committees, right? The regulatory agencies need to construct their support of this industry in a way that supports the efficiencies, right, and the benefits to our economies of the platform business model. They're extraordinarily beneficial to our economies, but then there are also risks, corresponding risks. So there's this healthy tension. Marshall, talk us through some of the considerations here.
There are a ton of interesting issues, and they're also very challenging around them. What do you do with them? So let's start with a couple of them. I always like to approach these either from the network effects or from the information economics perspective, because I think they help shed a lot of light on what's happening. So let's take, for example, the fact that Google or Facebook or Amazon get an immense amount of data on what their partners are doing simply by observing the transactions history. That then gives them privileged data from which they can then go after the high margin businesses or enter or vertically integrate in those. What's the right solution to that? There's an interesting challenge because the regulators have proposed as one possible solution that Amazon or Google or Facebook simply be enjoined or barred from using that data. I would argue that's probably not the best solution. Of course, the firms themselves should gain access to that data. So one interesting problem, where we would agree with the current European legislation, is that if the data is about you, you should have access to that data. So one thing that they're doing is that they're making reflexive the data analogous to GDPR, where you as an individual can get access to your data. Businesses are now getting the rights to that same data, which I think is a good thing. But by barring use of that data, you're actually reducing efficiencies. So one thing that might be better, something that we have proposed, is that you make that data available after a period to everybody. So just like a patent period, one of the things that describes the market data would be to then to make that marketplace, the broad aggregate transactions data available, not just to the partners themselves, but to the entire market, so that you can increase the efficiencies of the entire market. We know from standard economics that if you increase transparency, you can do better resource allocation, you can do more efficient pricing, and actually boost the efficiencies of the economy and perhaps foster some innovation as you have identified new sources of opportunity. So rather than in the current situation where only the platform has access to it, or the proposed situation where no one has access to it, we propose it's available after a spell such that the innovating firms get protected for a while, and then everyone gains access to it, just like a patent period where it becomes then more efficient. So that's one element of it. Another element, of course, is this self-preferencing problem. Boy, it's really nasty that if you get to be the judge, jury, and executioner on your own ball game, you really can score the high points on this. So this is a real problem with the self-preferencing, where you can change the rank ordering in what's displayed. You could actually favor your own services. This is one of those things where we actually think that there need to be some technological as well as legal frameworks for solving some of those kinds of problems. So if you create a technological and legal layer, an API layer, if you will, separating the infrastructure from the up, maybe a little playing field where after a Chinese wall, the internal services only gain access under the exact same terms as the third parties. This should also increase economic efficiency and then also level the playing field, reducing the self-preferencing that's happening. This requires a technological and legal membrane to separate the data and the access, but it's entirely feasible. Firms such as SAP and others have already implemented some of these practices internally, and it would be well within legal authority to try to create such things. And we think this is also far superior to breakup, where you actually lose some of the efficiencies compared to being able to gain access to the data, but it's on equal footing. Another element in here is is kind of the most favored nation clauses. This is true in the United States and Europe and in China, where if you consume one service, you're required to consume another service, such as an identification service or a payment system, something of that sort. That's something that the Europeans are banning, and the Chinese are as well. So that's another thing. That one's actually a well-recommended policy. I think it is the case, especially in markets with network effects, that some of the tying and bundling issues are quite paramount in how we can actually do that. So again, one of the things we're going to try to do is increase efficiency of the entire marketplaces, but do so in a way that is strategically useful for the firms and the players that are in those markets. So that's some of the thoughts on that. I don't know if you want to go to the next slide or hand that over to, was that Jeff? Or I'm happy to jump in and keep talking.
No, hey, Marshall.
Yeah, over to you, Jeff.
Welcome aboard, buddy.
Well, I think there's actually a really interesting question that was put in ahead of the webinar that talked about the demand for compliance with regulation versus the economic incentives of not complying. And what do you see in terms of firms and what their behavior might be? And I think a good example to illustrate that would be Uber, where they entered a number of markets before it was legal, and then just kind of moved ahead and then created demand both for the service and then for regulatory change. And the question you might ask, is that really how we want firms to behave? Or does that suggest that there needs to be a lot more capacity on the regulatory side in order to adapt much more rapidly to business model innovation? Of course, we would argue that, but that means investment, and that means the willingness to fund a whole different set of types of actors inside the agencies. And then another one that we're really interested in, if you kind of follow on, is if you look at the Digital Markets Act, it has a number of provisions of blacklists where those are prohibited behaviors, gray lists and white lists. If we step back and we think, well, the firms have a set of mechanisms and rules and regulations that they actually apply to their own ecosystems. And many of those in principle sound pretty good. So for example, if you're worried about self-preferencing, then you would want to have some sort of a Chinese wall between different parts of the organization, where those parts that serve sort of the ecosystem serve even the firm's own kind of ecosystem internal partners on the same terms as the external partners. Well, how would you know? And that's always the suspicion, is that there's self-preferencing going on underneath the hood. And so one of the things that we've argued pretty strongly in these forums is the need to essentially have a lighthouse within the gatekeeper firms that allow for testing of whether the firms are adhering to their own governance principles and adhering to the own kind of firewalls, if you will, that prevent that behavior. And then if they are, that's fine. But if they're not, then you need to have some ability to detect it and then take action. And I think it's those sorts of things that will make people sort of more willing to participate in some of these markets than they perhaps are now.
Fantastic. Thanks, Jeff. Amanda, maybe moving to the next one. So Marshall, if we think about the merger and acquisition landscape and in the platform space, you know, based on what we've just been discussing, right? We're seeing this this evolution, this maturation of some of the very large online platforms, right? Who are achieving that gatekeeper status. They're shifting into a role of really essential digital infrastructure, right? The M&A activity is really accumulating mass and capabilities and reach. How should we, as we're building platforms, or if we are partnering with platforms, or if we are competing with platforms, how should we be thinking about this M&A activity and whether we should read it as pro-competitive behavior or anti-competitive behavior, and how should we navigate effectively our businesses in this landscape?
So that's a great question. So let me give you a couple of different points here. And so for those of you interested, you know, I have to give hats off to Georgios Petropoulos and Jeff Parker, buddy, you know, friend here. We have a paper on this. I know, Jeff, if you want to pop the link into the chat area, we actually did an analysis of all the M&A activity of the GAFA, the Google, Apple, Facebook, Amazon, Microsoft, over the last 20 years. And you can actually see some of the merger activity there, and you can see whether or not they're doing it for technology, whether they're doing it for an acqui-hire, for kind of people they're doing it for. You know, what's the nature of the acquisition that's taking place? We have to be careful about asking these questions precisely. To explain why this is important, Amy Klobuchar has just introduced legislation, proposed legislation on breakup or increased scrutiny, the purpose of which is to create more competition. Unfortunately, the legislation uses traditional industrial views of platform firms. They're not the same. Those were driven by technology plays or driven by large supply side economies of scale. They're not driven by network effects, where so much of the value is created outside the firm. So a lot of the current existing US legislation is misunderstanding what needs to be done in order to fix the legislation. So let me give you one or two examples of this. Is merger and acquisition activity pro-competitive or anti-competitive? Or pro-consumer or anti-consumer would be a better way to ask the question. I really prefer to ask the question, does it create value rather than does it create competition? The irony is the assumption of creating competition is that it creates value, but that's not necessarily the case. So the creation of competition is not the same. We may get very different views of that. If you acquire a firm and you absorb it into the core, maybe you've increased the efficiency of that platform in a way, you've expanded the network effects, you've created value. Think of it in a dirt simple way. If you do have Metcalfe's law, where you have n squared as the proportion of value, and you take two groups and you add n plus m and you square them, you've created a ton of value. If that's happening, that's actually creating an immense amount of value, even though it's destroying competition. So that may or may not necessarily be a good thing. On the other hand, we also have to think about platforms as layered businesses, which again, are not the traditional businesses. A platform, much of the value is created outside by the users. You and I create the value on Facebook or Instagram. You and I create the value on Uber as an instances of that. You can think of the app layer on top and the infrastructure layer on the bottom. Imagine you were to impose a rule in M&A that when you bought an app on top, that you must allow them to multi-home. Well, in that case, the app is available on your platform and the other platform, and that's not only creating value, but it's also pro-competitive at the same time. That's distinct from pulling it into the core of the platform and then shutting it off from access to other components themselves. We have to think about where the layers are and what the rules of participation are in other ecosystems. So it's entirely possible for a software good to participate in as many ecosystems as you might wish. So we need more careful analysis and rules of that. For reference, Jeff has just plopped up the URL for that, but we actually have an analysis of the M&A activity and what some of the rules should be, and whether it should be allowed or whether it should be given more scrutiny. We think if it needs more scrutiny if they're going to take it away from the marketplace, and it needs less scrutiny if the acquisition is allowed to participate in other platforms, because of course then it's going to create more value across the other ecosystems. So there are a couple of interesting tests, quite different, again, for what we call these inverted firms, where value is created outside as distinct from the traditional firm where the value is all created by the firm itself. And the legislators need better ways to think about it.
Let me add actually just a couple of points on that, because I think, it was a really great discussion. So we were on this European Commission forum, and some members and some of the regulation, as you say, Marshall, the mergers and acquisitions were viewed to be potentially anti-competitive. And that's actually where the group split. And so we actually issued a split report that said some would prohibit most M&A activity, where others said, no, you really have to allow it. And I think there are a couple of tests, and Marshall gave a number about the value creation. But another really practical one is whether or not, when a large firm acquires an ecosystem partner, do they allow that ecosystem partner to continue to multi-home on competitor platforms? And if they do, then they're not removing access, as Marshall mentioned. And then another one that's, I think, really important, and it's around the incentives of the entrants, is if you start to prohibit M&A activity, you actually wipe out one of the preferred exits, which is to actually be acquired by one of the major tech firms. And so you actually might have the counterintuitive effect of reducing innovation incentives, because you've effectively forced them into an IPO strategy as opposed to an acquisition strategy. So that area, and that's why we split as a panel, because different people on the group kind of landed with different weights on some of those impacts.
I think we have to put all of this in the context of Europe also being far behind in the context of platform creation. And so interested in your views on, if you impose stricter merger and acquisition rules, does that actually hurt Europe's ability to actually build platforms of any substantial scale?
In the sort of world of unintended consequences, Peter, I would worry about that. I mean, I think there is a notion that the major U.S. and Chinese platforms are kind of the targets of regulation. But the reality is, if those things are going to be applied fairly, especially as we see the growth on the B2B side, those same regulations are going to cast a pretty wide net and right. Pick up a lot more firms.
So, and some people argue these are almost utilities and they're essential to the modern economies. And so in a sense, we can get into this narrow discussion of platforms, but they're actually becoming fundamental to how modern economies, digital economies operate. And Europe is using infrastructure provided by American companies. So it poses some very interesting fundamental challenges to the structure of their economies and innovation and who captures value.
And that really goes, to the heart of sort of a whole set of research questions, but also a lot of advice that we end up sort of working out with firms, is how do you kind of dance with the giant or the elephant without getting stomped by it? Yeah. And, that's I think the challenge and that's not just a Europe challenge. I think that's anybody who isn't one of the hyperscaling sort of infrastructure providers is always worried about getting displaced from sort of their end customer facing operations.
Right, right.
Yeah, yeah.
So let me jump in. There was a good question in the chat box. I was going to see if I could provide a general answer to. It says, how do we know that we're getting regulatory compliance in this, or how can you enforce it? If we implement that legal and technical barrier between the infrastructure on the bottom and the apps on top, so that there's this one layer that's of separation, and require that the platform publish the terms of access, then its own vertical services can only access under those exact same terms as everybody else. The beauty of this is it means government isn't setting policy. The business gets to set its own terms of running up the business, which is more or less what you want. But it's also the case that there's equivalency of access because its own vertical services have the same terms as everybody else. And it's transparent because they have to publish these terms of access. So it then creates this equal footing that enables visibility and enforcement and equality. So we think that's a mechanism to help solve that particular problem. There's let me drop one more idea in here that came up in the earlier conversation, which was kind of fun before we got going this morning. Uber just bought Drizzly, $1 billion, really cool. One of the neat things about Drizzly is that it has managed to actually navigate all of the alcohol requirements in each of the different states. But this then is an advantage that other small players don't have. In the exact same way, Amazon was among the first to navigate all of the tax structures in each of the 50 states. These companies then flipped in their initial opposition to regulation. They were then better at it than anyone else, and they support regulation ex post because they're now better and it becomes a competitive advantage. We will see exactly the same thing with these different jurisdictional things across countries as different companies like Amazon or Facebook are better able to navigate that legislation across the boundaries, giving them an advantage relative to local firms that have a temporary advantage until the big players manage to get all of them and then behave like Drizzly and Amazon more successfully. So I think we're going to see immense changes in this taking place over time.
Yeah, great points, Marshall. And as we step back, everyone, and think about our own organizational strategies for this landscape, whether we're building platform operations or partnering with platform organizations, or simply contending with them in the markets that we operate within, we have to understand all of these considerations in order to divine the best strategy for our own desired outcomes and the markets that we serve. So it's a complex landscape and certainly one that is evolving in interesting ways. But just real quickly, I know we'll deplete the hour that we have together here this morning pretty quickly, but our team is here for folks that are trying to figure it out or trying to scale or contend with platform businesses. Platform Strategy Institute is invested in helping organizations succeed in this environment, providing consulting and advisory services, platform transformation and training, and then of course, research and thought leadership as we've discussed this morning. So keep us in your Rolodex and just mark the URL, keep us handy, and we're happy to help wherever we can. But Amanda, why don't we move to the next page and really just open up the conversation. We've got some great questions here in the chat window, but we really wanted to make sure that we were leaving enough breathing room for a good open discussion. Folks, you can just pull your line off mute and weigh in, or you can drop your questions in the chat window. We've got a great question here. Let's jump into Marina's question. Great to see you, by the way. Thanks for joining us. So Marina is asking us, what do we think about the government's technology adoption? Great question. Different speeds around the world. Are they behind? And does that provoke friction or on the regulation, both international and domestic? Marshall, why don't we hand that one over to you? Jeff, you're probably going to want to weigh in on this one as well. But Marshall, you want to kick it off?
Sorry, I'll have to ask you to repeat that. I was just answering Dan's question in the chat box. So I'll have to ask you to repeat that question. I was just answering your question on APIs and cybersecurity, whether things are more.
Hey, Marshall, I'll take first swing then. You know, we see a really radically different adoption of sort of platform and cloud technology in governments. I think part of it is just it's kind of this enterprise software mindset where instead of viewing rapidly changing customer needs as use cases that you'd solve in some kind of an agile framework, they tend to be these monolithic consulting contracts that get given out to huge firms, and then those get implemented and they're designed to last for many years. But then those systems look sort of ludicrously antiquated in a very short amount of time. And so I think you're kind of fighting the same force that you fight with big incumbent companies when they start to try to be more agile, which is that there isn't an agile bone in a lot of these organizations' bodies. You talk about a use case and then deploying a solution with a hypothesis. How would you test that in sort of a reasonably rapid time frame with a small number of metrics, and then either fix, iterate, or deploy if it works? I think that's a mindset that can save an awful lot of money across the board, but it's going to need to take a lot of training. And that's the sort of thing that if you think about platforms, they already assume that mindset, you know, this sort of rapid iteration of solutions, either internally or by an ecosystem. So a lot of the ability to deploy those are going to kind of rest on changing the way that the sort of customer firms or the platform firms, governments in this case, think about these solutions.
You know, so let me jump in with a couple of very different thoughts, and completely consistent with what Jeff is saying, but I think different ways of looking at the problem. To tell you a tiny story on this, I've been talking with some of the infrastructure providers to cities at Siemens Corporation, who builds a lot of the energy and layout and grids for these cities. And it really is interesting. If you're selling something to a business, you couch it in terms of value proposition. If you're selling something to a city, you almost always couch it in terms of cost containment or cost savings, because they're always strapped for cash. And I tell you get a really different outcome if your goal is cost containment than it is value creation. And this explains in some ways why governments are often so far behind in the infrastructure that they are using. And it's fascinating even that, you know, they now in many cases are seeking to outsource to companies like Amazon and other providers, just because they're so much better at doing those kinds of things. It raises some other interesting issues about what we collectively as citizens should expect of our governments. Personally, I think they should be adopting more platform strategies. I think they should be trying to harness efficiencies in their areas. Give one of my favorite examples of that is, think of a snowstorm. It was massive in Boston a couple of years ago, and they simply ran out of people and snowplows. You could easily create a platform designed to have citizens with plows identify unplowed streets, and actually people take care of it. You expand capacity in a much more rapid way, the way platforms do, by harnessing external resources rather than trying to do it yourself. I think we need to be running governments vastly more efficiently than we are. And I think a platform strategy would actually help them. So that's a different perspective, an answer to your question.
Great point, Marshall. Thank you. Hey, Dan has a great question here. I'll throw this one over to Jeff. Jeff, from your perspective, do you think there's a greater threat to cybersecurity challenges today as platform business models are developed?
So kind of a twofold answer on that, Diane. And first I'll start with a story. I was on a panel with one of the CTOs of the major oil companies. And we were talking about B2B platforms and how rapidly they were coming sort of into play. He said, you know, there are hundreds. I get pinged all the time, you know, lots of different solutions. He said, you know, I can't work with hundreds because I'm dealing with state-sponsored sort of hacking. And literally this has to be, you know, it has to be resilient to, you know, North Korea. in that level of kind of asset. So I have to have scale in those organizations. I can have ecosystem partners, but somebody has to be responsible for that level of security. So that's kind of part one. And so I think that the security issues matter hugely. And then part two, and I think it goes to some of the work that we've done on the European Commission, is around instead of always requiring portable data, it makes much more sense to leave the data where it's collected and then require access for entrants, ecosystem partners to come and get access to the data, but within secure infrastructure. So either, if it's an Amazon, then they're used to that sort of thing. Or if it's smaller firms, then you'd have intermediary infrastructure providers that would then allow for innovation, because you can come get access to end user data, but not always having to copy that data and then potentially leaking it. So we call that in situ access. And I think that is sort of a regulatory requirement that might actually have the side benefit of dramatically improving security and providing a lot more access for innovation and competition. So I think that the regulatory authorities need to be really thoughtful when they require some of these data portability. That might actually be opening Pandora's door on some of these kind of hacking issues.
So let me elaborate on that just a bit. So GDPR is a great example. Folks think data portability like number portability should work. It doesn't. It's not the same. In data portability or number portability, you have one number that attaches to one person and it's yours. In data portability, two people have owned it and it's non-rival. I mean, you and I can both have the same data and still use it. Where if it's the same telephone number, we can't both use it. That's a party line. The thing about data portability is you can't use data where it's accessed. So if you pull it out of Facebook or you pull it out of Amazon, you can't make a purchase, you can't make a post, you can't do things with it. It also obsolesces and goes stale. So what Jeff and I are proposing is this in situ access, where you use data where it's resident. This will solve a host of problems, not least of which is it will be current, but it's useful in its location. It even solves moral hazard problems. Go back to some of the legislation in the Digital Markets Act. The idea there was businesses should be able to pull their reviews off of Amazon and be able to post them somewhere else. That sounds like it would be pro-competitive, but think about that. Business would then immediately, if we flip it around, create moral hazard and post only their 5-star reviews, dropping all their 1- and 2-star reviews. You can't apply for a credit card on the basis of being able to selectively drop all your non-payment history. You don't want that. You want, if you do it in situ, for example, then the platform still manages it, and the information is accurate for all parties, not just the ones who might actually favor a particular problem. This in situ, what we're arguing for is users gaining a new right of in situ access, where you or a business gains the right to use your data where it's resident, rather than this what we think is an inferior right of taking it off platform. I think that's not as good.
Yeah, great point, Marshall. Marshall, we have a couple of questions that really align with some of your earlier comments. A lot of folks are focusing in on really the implications of platforms and the socioeconomic problems in developing countries, but then also in a parallel application with the massive value migration through the past year. One of the industries that we're also seeing evolve and could benefit from platformification is higher education. What are your thoughts about the implications of platforms for solving problems in technology adoption in developing countries, addressing socioeconomic problems, and then also the implications for higher education? And then we'll bounce that over to Jeff as well.
So I love that question. I think Jeff and I both, and all of us as academics, really feel this. Scott Galloway's had some amazing critiques of higher education as being this really expensive value proposition. I am really pleased to say that at Boston University, we're now offering a complete MBA for $24,000. That's a 2-year degree for $24,000. It's all online and it scales. So we're actually trying to change the cost basis of this. So one of the arguments is that we might be able to create platforms to deliver online or to deliver at scale or to deliver at vastly lower cost by harnessing external resources. No university has all the best resources in the world, not even Harvard, right? You can tap resources from all across the globe. And by creating these inverted firms, these externalized organizations, we should be able to create high quality, evolving, lower cost, easy access education. I think one of the things we do is to predict the transformation of an industry. What fraction of the value is created by information? In education, it's a huge fraction. So of course, education is going to be one of the transformed industries. So I think a lot is going to happen in that. Let me turn that over to Jeff. I think we'll probably.
Yeah, no, I mean, this is a great topic, and it's one, you know, Marshall's been a direct actor in designing that MBA program he mentioned at BU. So, you know, that's sort of putting both theory into practice. If you step back and you think about the past year, I mean, here we are all on Zoom, and we've all done Zoom for a solid year now, and so has all of education, with really mixed results. I mean, if you look at kind of the primary education, it's pretty clear that putting kids in front of Zoom is not the greatest way to raise sort of a next generation of citizens. College, that's more of an open question. I mean, I think that they deeply miss the social interaction. I certainly know my own 2 college students did, and one child still in. But that being said, I think as someone who also delivers the content, we did a lot of innovation. It was pretty painful, but things went, I think, in many ways better than expected. Learning how to deliver value and content using this channel. So then the question, I think, is really, how do you systematically capture that innovation and then make that part of the go forward? Because to Marshall's point, you know, we have the ability to do digital delivery. Many people will just want to snap back to business as usual, but the cost structure of your average liberal arts school will not support that going forward. And, you know, the saying of, you know, what can't continue won't. And at some point that will hit a brick wall, and then we as an industry will be forced to innovate. And then the question is, who's going to do that ahead of time? And then who's going to hit the brick wall, run out of resources, and then have to kind of cede to other players. So that's like, and that experiment's been run for a year by force. And it's, I think, really a whole set of academic work needs to be done on understanding what worked, codifying it, assessing it, and then packaging that up for deployment. You know, whether that's going to happen at campuses or, you know, I see a whole sort of market opportunity there for a lot of firms to help or even to enter those markets.
Excellent. Thanks, Jeff. Gosh, great discussion, both in the dialogue here and in the chat window. Thanks, everyone. I think we have room for just about one more question. And frankly, it's a good one. It's a great one here. So I think we're going to toss this one over to you, Marshall. If we think beyond education, what about the using platforms to reduce the trillions in finance gap towards the micro, small, medium-sized enterprises in the developing countries? Sounds like that's a contemporary issue that that this team is solving for or thinking about, and could use some maybe some additional perspective to kind of think through it.
So one of the things I love about platforms is their ability to harness untapped resources. We know from basic economics and operations management that a resource that isn't being used has a shadow price of 0. It's not being charged, it's not being anything. It's like a loan is spare capacity when it's money that's not being used. Or, an Airbnb guest bedroom is used by your family and friends 2 weeks a year. So you then sell it and that becomes a new resource. One of the beauties of platforms is the ability to tap these spare resources that have a shadow price of 0 and then bring and create real value. It's the capacity to make that happen. Now, in order to make that happen, we'll need in third world countries access to things like smartphones, enough infrastructure that you can coordinate. To give a fascinating example, even outside in the first world, Drizzly didn't even have the drivers. It required the alcohol stores to have the drivers themselves. But that, in some sense, was an untapped or spare capacity. You need the mechanism to be able to do that. And if we can actually introduce those mechanisms, as well as the platform governance mechanisms to create the value, I think the potential for creating and distributing that value socially in third world countries is immense. And that, frankly, is one of the things I think would be most interesting to pursue with cities as platforms or some of these other infrastructures. If you're interested in that, I would actually strongly advise you to look up what happened in Indonesia. I forget the name of the platform at the moment, but they started with Gojek. Gojek is the platform. They did a fantastic job of taking the friction out of getting people to different places. And the instruments they used were bicycles. Why? Because bicycles could actually get through traffic in ways that cars could not. It's a really interesting example of solving some of the coordination problems and tapping spare resources. So take a look at Gojek in Indonesia as a great example of having put something off the ground and creating immense social value.
Let me dovetail on that, because I think China gives an example. So if you look at the sector there, when they had the rise of the big platforms, so think Alibaba, think Tencent, then what you saw was they had the ability to look at the transactions that were occurring and then infer sort of creditworthiness, because they didn't have a credit bureau or sort of assessment industry the way that you would in sort of more developed economies. But that ended up leapfrogging, because if you think about it, they actually had better data and then were able to provide credit on a kind of an as-needed basis. And you saw that during COVID, where literally, I think it was Alibaba stepped in and gave $500,000 loans kind of immediately to their ecosystem partners based upon prior activity. And they were able to credit score that in ways that I think you can sidestep some of the financial infrastructure that we saw in sort of OECD countries. And if you could take that same idea, that should allow for a lot of economic activity in developing nations as you start to deploy some of these sort of broader platform markets. And so that provides a bit of a flip side, because you worry about the platforms capturing a lot of the value. But in some of these cases, they also provide access to uncertain demand patterns that they could never find themselves. And then also credit to be able to have.
I just throw in that there's a recent survey done of Africa, and there are now 600 platforms operating. So this notion that they're not also pursuing these, I think, is belied by, the fact that a lot of these businesses are established. Platforms can actually solve certain market failures that traditional businesses can't, which is interesting. Not always. They also suffer from lack of infrastructure, but they do come up with very clever ways of working around trust issues and things of that nature. So I think the platforms can actually, in your point on China, Alibaba wouldn't have grown to the size and scale of that it did without solving the banking issue, right? And it was that innovation that actually allowed that platform to grow. So it's pretty interesting to see where platforms can actually solve certain institutional gaps, in these countries.
And with that, we are going to have to call it a wrap for the day. What a great discussion. Boy, I think we covered the gamut today. It's clear that that this audience, that this community is solving for some pretty interesting and important market opportunities. So again, thank you so much for sharing and for weighing in. Please do plan to join us. We're reconvening next month, March 10th, same time. And again, our team is here for you. We provide consulting, advisory, training, platform transformation, and obviously thought leadership from research. So Dan, thank you. And yes, let's connect. If we can be helpful in any way, just reach out, and we'd love to help. But we'll see you here next month. Thank you again.
Thank you, Diane.
Thanks for joining us.
Thank you, everyone. Really appreciate you being here with us.